All right, guys, back from the weekend. Hope you all had a great weekend, but it's time to get back to work, of course. It's Monday evening. It's October the 5th, 2020. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, if you're tuning in for the first time, don't forget my job tonight is to help us find the best entry setups for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys and gals tonight. Charts are already in the background. As you can see, got the E-minis, got the oil, and we got the gold on our radar for tomorrow. Boy, big moves in today's trading session, three-legged moves to be specific. We'll talk about how three-legged moves are really important clues in a lot more detail in tonight's video. Got a bunch of great setups we're tracking for Tuesday. Before we jump in, though, and get this party started tonight, though, I just want to make sure to remind you guys, if you haven't done so already, make sure you subscribe to our YouTube channel. That way, you never miss all the good stuff we publish on this video. And don't forget, if you guys have any questions for me tonight, drop those questions in the comment section below. I'll get them answered as soon as I finish up with the video here this evening. And don't forget, I always appreciate you guys tuning in every evening to watch this video. If you're like me and you rely on this nightly newsletter to get your mind right and get those charts right, if you enjoy this video as much as I enjoy making it for you guys, I always appreciate hitting that thumbs up button for me on this nightly newsletter. So thank you so much for tuning in. Don't forget to subscribe if you haven't done so already. Drop those questions in the comment section below and a thumbs up. Always appreciated if you guys enjoy the value every evening on this video. But enough of the introduction, though. Time is ticking. Let's get this party started. Let's kick off tonight's video with the calendar for tomorrow, courtesy of Econo Day. Let's take a look at what's happening here this week. Second week of the month. Now, the second week of the month is kind of like the fourth week of the month. It's historically not a very busy news week, right? We had the non-farm payroll report and the first of the month last week. It's not the last week of the month. It's not OPEX, right? Which of course is next week. So it's kind of the second week. It's kind of sandwiched in between some big weeks, first week and third week. So historically speaking, the second week of the month is a relatively quiet news week, right? That does not mean the markets are going to be very quiet, but historically, though, you're not going to see a lot of the big news reports coming out in the second week of the month. Now, obviously, with some of the events that happened over the weekend between the U.S. President Trump being diagnosed with COVID, the hurricane, right, that's now brewing as a tropical storm in the Caribbean right now, there's a lot of stuff on our radar right now. So even though there may not be a lot of published news reports this week, nothing that we really expect to have too big of an impact, we definitely have some intangibles, right? One of them being the big one being the U.S. President Trump seemingly contracting the virus and almost like a storybook, a fairy tale, right? Beating what appears to be at this point now, making I don't want to say beating, but making some very substantial recovery efforts, right? Thanks to modern medicine, right? That is probably the biggest variable as we go into the rest of the week, because it really opens up all of the stay-at-home names, all of the Zooms, all of the Netflixes, all the stay-at-home names, and all the travel names, the tourism names. And so it really, in my opinion, it's a second week of the month right now. But boy, oh boy, what happened over the weekend and what is now developing here in the United States right now is very interesting as we go into the rest of the week. I would be lying to you if I told you I knew exactly what was going to happen, right? For all I know, the U.S. president could be jumping the gun and could be back in the hospital later this week. That would be obviously disastrous, right, for the recovery process of everything. Or things could go back to relative in quotes normal. So very interesting time here as we go into this second week of the month. Now, looking at the calendar here for this week, right? It is very much important we understand it is the second week of the month. There's probably not going to be any, well, probably not. There aren't any real big scheduled news reports this week. It is important that you keep in mind it is what's called Golden Week. It's one of the biggest holidays in China. Golden Week lasts all week this week. So be aware if you're wondering why the overnight volume is a bit low this week. It's not just because the second week of October. well, it is because the second week of October, the entire country of China is celebrating what's called Golden Week. I'll let you guys research that on Google. It's basically just a national holiday that lasts for a 2-week period at the beginning of October. So that's going on. That will definitely drag a little bit of volume out of the overnight session. We talked about the hurricane, right? We talked about the hurricane, right, or the tropical storm at this point now. That obviously will be something we're watching here because of the effects on crude oil. And then again, right, the U.S. President Trump, which I think is potentially the biggest wild card of the week, right? This kind of what seems to be a only out of a story tale, right, or a book, right, would be coming down with it on Thursday night and coming back right on a Tuesday. It just seems remarkable, and it definitely seems that will be parlayed into something later on this week. These are two of the biggest kind of themes as we go into. We've also got this stimulus talk, right? Stimulus, of course, back on the table again, right? Speaking of coming back for more, back on the table. We keep hearing about stimulus talks this week. As of end of last week, we started hearing more about there might actually be some sort of stimulus deal. So these are definitely the three big talking points, kind of the intangibles, right, as we go into this what should be a relatively quiet official news week. Now, looking closer here at the schedule for tomorrow. Big news tomorrow morning, 10 o'clock Eastern Time, Jolts Report. We get the Jerome Powell speech at 10:40. I'm not expecting to see much out of Jerome Powell tomorrow. This is not the same type of testimony that we saw 2 weeks ago, right? This is just, he's a keynote speaker at some event. So although I don't expect Jerome Powell to take too much of effect here for us, I do expect that Jolt support at 10 o'clock Eastern Time to be probably the big news here for tomorrow. Now, going forward into Wednesday, we get the oil report on Wednesday. Now, that could be a pretty big deal on Wednesday morning because, again, we've got this tropical storm. I think it's called Delta right now, potentially turning into a hurricane as we go. This is, speaking of storm, this is the perfect storm here. If we have, again, I mentioned, the U.S. President Trump coming back after COVID. Does that start to kind of trigger the reopening idea? Does that get traders on oil excited? Again, I can't emphasize enough how the next couple days here, the health of the U.S. president, I think that will really be a talking point here as far as oil traders go. Because if the kind of quote unquote, if he can beat it, well, why can't I fly in an airplane? Why can't I go on a trip? Why can't I do that? I do believe that will probably start to play into. You saw how much oil jumped today. Did oil jump today because of the pending hurricane? I don't know. We've seen a couple hurricanes over the past few weeks, and they didn't do anything to the price of oil. It makes me think that this whole thing with the U.S. President Trump is playing into that as well. The reason I mention this is because with that tropical storm becoming a bit of a hurricane, will we get a really good inventory number for the bulls on Wednesday? That is something we're definitely watching here. The FOMC minutes on Wednesday afternoon, probably not going to be that big of a market moving event. We've already heard a lot from the Fed already. We heard Jerome Powell testify right a couple of weeks ago. So I don't think that FOMC meeting minutes will have too big of an impact, but definitely anticipate there to be some eyeballs on that petroleum status report on Wednesday. And then, of course, with the jobs on Thursday, everyone's watching jobless claims right now because of obvious reasons, right? Those millions of jobs that were lost. Everyone's trying to see, right, kind of how these jobless claims, do they keep on rebounding? Do they collapse? That's on our radar. And then, of course, Friday, right? As we go into the end of this week, it's important to remember that next Monday is the Columbus Day holiday. So not only do we have the Golden Week in China, which will eat away at some of the volume in the overnight, we've also got, as we get closer to this weekend, we've got what is a pretty highly anticipated holiday weekend coming up here in the U.S. It's kind of like the last break of sanity before the holiday season kicks into gear. Halloween, Thanksgiving, and of course the Christmas season, right? Christmas, Hanukkah season as we go into the month of December. Where I come from, Columbus Day is kind of that last little break before that sprint into the end of the year. So we definitely know that this Friday, the point I'm trying to make here is this Friday will probably be a very light trading day on Friday morning. Now I could be wrong about that, right? I could easily be wrong about that with this tropical storm turning into a hurricane, the potential, comeback from the U.S. President Trump. It definitely parlays into what, again, may not be a scheduled busy week, but it could be a very, very interesting week here as the markets start to rethink these stay-at-home stocks, right? Some of these travel stocks. I just think you're going to see a lot of that sort of play in here and what should be a very exciting rest of the week. Now, don't forget, tomorrow morning, every morning, 8 o'clock Eastern time, we're going to put the plan together tonight, but we'll trade this plan together in our trade room tomorrow morning, 8 o'clock Eastern time, right? Tomorrow morning, 8 o'clock Eastern time. I would love to have you there with me, and we'll prep the charts, and we'll trade this stuff together tomorrow morning at the opening bell. I'll put all the links you guys need to get registered in the description of this YouTube video. So grab that link in the description, get registered as a brand new member, and don't miss tomorrow morning's trading session. I should also mention, too, I will only be publishing the newsletter on Monday and Tuesday this week. There'll be no newsletter on Wednesday and Thursday. And I never do the newsletter on Friday nights anyway, so just no newsletter on Wednesday and Thursday evenings this week. I apologize for leaving you hanging. Only Monday and Tuesday here this week. Obviously, I'm providing guidance to all of our clients here, right, at School of Trade. All right, let's grab some charts here now. You guys on the plan here for this week? Very, very curious how the rest of this week will play out, right? The U.S. president comeback, right? The stimulus talks continuing, the hurricane. Very interesting time to be a trader. Let's jump into some charts here. Got some S&P, got some oil, and of course, right, I've got some gold here on the radar tonight. Everything is 3 legs up right now. Had a big, strong run higher here today, and you'll see everything is 3 legs up. 3 legs up. Now, gold, of course, you can see it right away. It's inside of a range. Oil is also in a range. So we have some bull markets into trading ranges for the oil and the gold. The S&P is a bit of a question mark right now as far as whether or not it will give us a trading range. Let's kick off the video tonight here, or the chart section at least, right, with our S&P 500. We'll talk about those range-bound markets here in a moment. But the most important thing right now, what happened on the S&P today? If someone was to ask me, Joe, what happened today? I would say, first of all, we gapped up over the weekend. Now, again, difficult to tell what all the excitement was about. It does. From what I can gather, though, it does appear that this U.S. President Trump getting knocked, right? The markets get knocked down on Friday morning. Think of this as the comeback move from last week, right? So very interesting how the markets didn't waste any time today and got right after it. Oil pushed higher as well, and gold, of course, along with it. Most important thing, though, is that weekend gap, right? That weekend gap at 33.45 half there. We know the weekend gaps, they love to get filled. We saw last week, they tried so hard last week to get that weekend gap filled. That will be a magnet for the rest of the week this week. So very interesting. Last week, they missed their fill. Will they get that fill here this week? That is something I'm watching for on the S&P. I'm going to leave that 45 half area on the chart for the rest of the week. You'll also notice 1 leg, 2 leg, 3 legs going higher, right? We call these triple measured moves or a 3-legged move. Now, why is that important? It's important because, as you'll see with the S&P, with the gold and the crude oil, usually when a market goes 3 legs in one session, usually we're in store for a bit of a range-bound scenario in the short to medium term, right? It may not last forever, but we usually are going to see a bit of a trading range. We don't have that range on here just yet. I mean, it might be right there, but it's very, very small. Definitely not as pronounced as we're seeing it on gold and the crude oil. So we have a strong bull run, right? We got 3 strong legs going higher. The last leg, you'll notice, is a very strong leg. And anytime we see this much strength in one direction, you expect to see another leg in the same direction, if at the very least just to retest the high. So we see a very strong three-legged move. I'm anticipating a range, but with that big blast to finish off the session there, I would expect as soon as we get a pullback, buyers will be eager to get in on that next pullback. So we definitely want to be a buyer on this S&P. I'd like to find an area of support to be a buy, right? So I'd like to be looking for prior swings at 86. I've got prior swings at 75.5, prior swings at 67. I'm also drawing up this hidden channel, drawing off the highs, bringing it down off that low, and that, of course, is giving us an area of support as well. So I do want to get a pullback. I want to be a buyer here on the E-mini. I've got really the pick of the litter here right now as far as support levels go. My big question, I think, in my mind is how does this trend line come in? Because it almost looks like we're going to have to battle through a bit of a falling resistance trend line, right? I want to buy at support in a bull market like this. It's a trending market. I want to go with that trend, but I don't want to buy into that falling resistance trend line. So I have to be careful, right, as we go forward on that. So shallow pullback, yeah, shallow pullback's a bit tricky because I got that trend line. I would love to see a really deep pullback. You know, if there's one thing we saw today, how strong this move was, if we can get a nice deep pullback here, I think you're going to see a lot of buyers that will want to jump in on that. That's what I hope we get. I hope we get a nice deep pullback. So kind of thinking about if the market pulls back here for us, there's kind of two patterns that come to mind. If all we get is a shallow pullback, I'm going to have to worry about that falling resistance. And so what I'll do is I'll look for a trap entry pattern. So if we do see a shallow pullback down to the low of that channel, down to that 86 support level here, what I'll basically do is I'll look to be a buyer, but I'm going to wait because I got to wait to get the sellers roped in here. I've got to get some sellers to try to sell short on this, hopefully off that trend line, and I can look for a trap. Trap patterns are my go-to pattern anytime I'm concerned about buying too high or buying into a level of resistance. So think of it this way: if we see a relatively shallow pullback, I have to avoid buying high, avoid buying into resistance, and therefore I'll look for a trap entry pattern. But if I see a nice deep pullback here, a nice deep pullback, now I'm not so worried about that falling trend line now. Now what I can do is I can try to rope in some of these sellers, get them to get short off the moving average, buy into their stop losses, and then depending on where that trend line is, right, buying the pullback that comes thereafter. So think of it a deeper pullback, I'll look for what's called a failure pattern. Now, failure patterns come in lots of shapes and sizes. You can see an example of one right here, right? We pull back, we go to the moving average, the bears clearly try to get short, and it snaps back higher. So they don't have to be perfect. I just want to make sure, though, that, again, if I had it my way, we get down inside this 75 area, nice deep pullback in, get these bears to come in, right, to get them to be buying or try to get them to be selling short on that pullback. Once we do, we know exactly where their stops are. Again, it's not a bull market yet. It isn't a bear market. It's a bull market, right? So because the market is so bullish, sellers who are trying to sell short on that first pullback, you're going against the overall momentum of the market. That's why I always look for those bears to fail to buy into stops. And then again, it all depends on kind of where that trend line is. I can look for a pullback before we get back up to retest those highs. A seller failure pattern into a bullish pullback pattern. So shallow pullback, look for traps. Deep pullback, look for failures, and that snap back up to retest the high. And you know, I always get a lot of questions about traps and failure patterns. They are some of the most powerful entry patterns we use every day in our trade room, and I cover all of them in our free trading course. So you got to grab the free course. What I'll do is I'll link them up in the upper right-hand corner. I always get a bunch of questions about my favorite entry patterns, how to choose the right time frame, how to use the moving average. I cover all of that in my free trading classes here at School of Trade. So pause the video, grab that free course button that popped up there in the upper right hand corner, get registered for the free course. That way you're ready for tomorrow night's newsletter. When I say trap or failure or pullback pattern, you'll know exactly the rules that I use to qualify those. So pullbacks are looking pretty good. Now, like I mentioned earlier, I would expect expect here to get some sideways movement here. So if we do end up seeing the market kind of run sideways here overnight, what's the best plan for a bull market into a trading range? And we should probably talk about this because oil and the gold are pretty much that right now. There are three basic patterns, as we say quite a bit on this newsletter. When I have a bull market that turns sideways into a trading range, three basic patterns. The best one is going to be that failure pattern below the low of this trading range. I'm going to wait for the price to pull back below the range. I'll wait for sellers here to confuse this with a breakout. Let them get short on the breakout pullback. If there's one thing about rookie traders, and I remember loving this when I was a rookie traders love breakout pullbacks. I thought I had cracked some secret code by adding divergence on it, right, when I was a rookie trader. But I'll tell you, you can add as many divergence signals, you can add as many extra complicated indicators on top of this, but predicting counter trend breakouts is a very difficult game to succeed at. So whenever I have a bull market into a trading range, I just wait for those poor, unfortunately uneducated traders, right, trying to trade those breakouts, those breakout pullbacks, and I'll buy right into those stop losses with basically a seller failure pattern below that trading range. That is always my bread and butter when it comes to a range bound market. Then there are also two breakout patterns I like to use. I don't try trading breakouts. What I do is I wait for a 1, 2, 3 breakout pattern, a strong move up, a pullback to the moving average, a jump off the moving average. Then what I'll do is I'll mark up the high of that, the two highs. I'll find that low, and I'll create that in as what I call a 1, 2, 3 breakout. Again, 1, 2, 3 breakout into a hidden channel pullback, right? I call these 1, 2, 3 breakout patterns. And then the third pattern, which is one that you really got to practice, and we do it together a lot in the trade room. We see a strong move higher, right? The key here is it's a blow your hair back, right? Strong move going higher. Then we wait for a shallow pullback, a higher high in price, and a trap below that low. I call these 2 try breakout patterns because strong move up, bears try once, bears try twice, and I'm looking for a trap. So again, we're going to talk a lot about these patterns here tonight on this video because we've got a lot of these stuff again on oil and the gold right now is pretty much what you're seeing right now. It's a bull market into a trading range. Look for either that seller failure below the range, that again 1, 2, 3 breakout, or that 2 try breakout pattern. Now pause the video, grab your screenshots, have this ready for tomorrow, because if we start to see this thing go sideways here, and again, it could be here, it could be a little bit lower, it could be a bit higher, but once we start seeing it go sideways, we start looking for that seller failure below the low, right? Look for those bears coming in. Look for those bears trying to get short off that breakout pullback and buy right into their stop losses. You can see, again, a good example right here. This is definitely a trading range. Market runs lower. Bears to sell the breakout pullback, and I'm sure they regretted that idea a few minutes later. So we definitely know that, right? That counter trend, bear breakout, I'm going to buy right into those stop losses with a seller failure pattern. As we go higher here, it's that 1, 2, 3 breakout, mark the high, mark the low, buying the first test because the first test is the best test of that high, or it's that strong move up right above the top of that range, shallow pullback, higher high, and that trap low from there, right? So hopefully that makes sense there. Now, what if the market keeps on going higher? Where do we think these buyers are trying to get to? There's a lot of options here as we go overhead. If I had to guess, though, I would guess the pendulum swing. I would definitely guess the pendulum swing. Last Thursday, if you recall, before non-farm payrolls, we had that trading range. The amount of the move below the range, right? This was that headline, right? Trump's got the coronavirus. U.S. president has the coronavirus, right? That was that big knockdown. And again, right, you could definitely tell, at least it seems like the markets were responding to it, right? That kind of comeback move here as we go into this week. If I project the amount of the move below to the amount of the move above, you can definitely tell, right, that 34, 32 and change, that is where I would anticipate these buyers if we see another big rally tomorrow, or maybe tomorrow is a range-bound scenario into a big rally on Wednesday. But definitely that 34, 32 and change up there is certainly where I would expect this thing to want to go later on this week. Now, what if the market does keep going higher here without a pullback, right? What if it does keep on going higher here? If it does, I'm going to adjust my channel. What I'll do is I'll mark up that high, I'll bring it down to that low, and I'll keep looking for that same failure, right, into pullback combination off of that low. So, for example, if the market does want to go higher here, let's just say, for example, the market does want to break higher here, what I'll do is I'll mark up that high, I'll mark up that low, I'll wait for that nice deep pullback, try to get us underneath the moving average, look for those bears to get fooled, seller failure into bullish pullback. And again, we'll keep on using measured moves and channel rotation because after all, it is a trending market. Now, last but not least here, what if it turns bearish, right? Can we sell this market right now? Is it possible to get short on this? It definitely is, but we have to see a full-blown reversal, right? Yes, we are 3 legs up, but we're way too strong into the close here. That strong move into the close is a little bit too much to want to sell into. You could take some profit here and sell it, but as far as actually shorting this market right now, that will be a very big gamble. What I'd rather have happen is a nice strong pullback, then give those bears, right? Let me see it. Show me you can actually hold that pullback. I want that 1, strong move down, that 2, pull back to the moving average, and 3, strong jump off the moving average. What do we call those? We call those 1, 2, 3 reversals. 1, 2, 3 reversal pattern. Mark the low, mark the high. First test is the best test, selling off the high of that hidden channel. Where's our target? Yeah, back down to those lows, possibly back down to refill that weekend gap. I got to wait for that reversal before I can try to sell a strong bull run like this. So do we get a shallow pullback? Remember, shallow pullback traps, deep pullback, seller failures off the moving average. Do we go sideways here tomorrow? That is, of course, on our radar here for the S&P. And again, big question mark right now. How will this, right? How will the U.S. president coming back to the White House, how will that play into everything that goes into the lockdowns, right? And everything that's been happening with this coronavirus, because it really kind of punches a hole in a lot of the, a lot of the ongoing lockdowns now, which is why I think it is one of the biggest potential just wrinkles, kind of known unknowns here of this week. We'll definitely be watching that closely here throughout the week in this trade room. Now, over on the oil here, what do we know about oil? Now, again, oil has a couple interesting things going on right now. Right now, you get the hurricane. Again, right now it's a tropical storm, right? But it may develop into a hurricane. At the same time, though, again, I know I'm saying it a lot right now, but I think the U.S. president getting the virus, coming back so quickly, out of all the markets, the oil market does seem to be one of the bigger markets that may benefit from that, just because there may be this adopted mentality of, well, if he can do it, I can do it too. And you know that oil has been depressed over the past 4 months because the lack of air travel, the lack of tourism, the lack of people leaving their homes because of the fear of this virus. So one of the big variables here for oil is obviously the tropical storm Delta, but honestly, we've seen a lot of these hurricanes the last few weeks. There's so much oil inventories available. I think by Wednesday, with that inventory report coming out, we'll really have a much clearer look here as far as how much that hurricane is actually going to impact this. And the bigger variable here, right, is this virus. And if people start to open up here or start to be open-minded to that opening up, because oil's been really held back because of that over the past few months, right? Like every other, travel-related, tourism, entertainment-related stuff here, they all rely on oil. Now, what do we know about oil, right? We're speculating, obviously, about oil right now. What do we know about oil? Well, here we are again, 3 legs up again, right? There's your 1 leg, there's your 2 leg, there's your 3 leg. What do we expect on oil? What do we expect in a market that goes 3 legs higher? We expect to see a bit of a trading range. So there's your range now. We've got our double tops, right? Our double bottoms here. So we're definitely starting to see that sideways movement here. Now, what is a range, by the way? Ranges are balanced areas. Ranges, they end up becoming magnets for price. So anytime we see a range on the chart, we know that range will probably act as a magnet. Now, you could argue there's a range up here. You could also argue there's a little range right here as well, right? There's some overlap right there. You could also argue that. So that's part of the reason why, right, I've got that as my battle zone, because that is probably going to be a bit of a magnet as well. So bull market, I definitely want to be a buyer here on the oil, right, the black gold, the Texas tea. I definitely don't want to buy right into that triple measured move, right? I don't want to buy at resistance. I want to buy at support levels. So what I've done is I've looked for support levels below the range. Right? One of my favorite rules when it comes to range-bound markets, if the market's bullish, look for support levels below the range. My favorite one out of all of these is probably this hidden channel low. I really like that channel low down around that 38.65, 38.70 area. That is a really nice spot there to be a buyer. So I'm waiting for a pullback, right? I'm waiting for a pullback. And really, a lot of similarities to the S&P. If we go, for example, if we go sideways here and we get that pullback here, I'm going to have to go for a trap. It's going to be a very shallow pullback, right? I'll have to use a trap. Does that make sense? Right? I'm still off the low of that channel, but I haven't get a deep pullback though. So if we just kind of tread water here, buying the low of that channel is a very different game than going lower now, right? If we do get that move lower now, I can probably look for those bears to get fooled, look for that seller failure, right, into bullish pullback as we go. Those are going to be 2 easy patterns if we can get that pullback. So really, it's very similar on oil. If all we get is a shallow pullback, for all I know, they may trap low and we may see a little, right, trap entry. Again, with some of these kind of fundamentals coming in right now, right? The comeback of the U.S. president, right? The tropical storm Delta, stimulus talks going on Capitol Hill right now. Wouldn't surprise me. Well, I guess it would surprise me a little bit because it's such a big move today. You definitely expect to see some sideways movement here. I wouldn't expect to see that aggressiveness. But again, there's a lot of variables out there we may not be aware of at kind of face value here. So a shallow pullback trap. What I really want to get, though, is get me down inside this buy zone, right? Get those sellers to take the bait, getting short off the moving average, right? And get me that chance to buy into stop losses, buy the pullback on the way back up to retest those highs. A failure into pullback combination wouldn't be bad at all. I think the one big thing, though, is if we do go sideways here, just be aware that, right, that channel low is not going to be as desirable, again, if we go sideways for a while. Then we pull back. Okay, I can still be a buyer down here, but now I don't have that good risk-reward ratio any longer now. So what I have to do is I'll have to wait for that 1 try for the bears, that 2 try for the bears, and I'll have to wait for a trap entry, just because traps are the most effective entries to avoid buying too high, right? That way you're not buying into that range or buying too close to what is assumed to be major resistance at that 39.61. At the same token, though, too, if the market keeps on grinding higher here, right? If it keeps on grinding higher, well, now what I'll do is I'll call this a spike in channel. And we'll just simply, again, wait for that pullback. I'm waiting for that pullback. I'm waiting for that seller failure, right, into bullish pullback combination. So if the market continues to kind of grind higher here, as it definitely may, if the market kind of keeps on grinding higher here, kind of in the wake of the comeback, right, of the tropical storm, if we do keep kind of grinding higher here, not breaking out higher, but kind of grinding higher, I'm going to pretty much do the same thing. I'm going to wait for that pullback. I'll wait for those bears to get caught trying to get short, right? We'll pinpoint, of course, their stop losses, pinpoint those stops, right? Buying stops, and then buy that pullback, right? right, as we go higher. Don't forget too, I'm very much open-minded to a breakout here, but I've got to see some proof of that breakout. We get a big round number up at $40 a barrel there, so we could easily kind of grind higher and then pull back, right? We know the plan for that. That plan's pretty straightforward. But again, if the market really jumps, right? If it really jumps, strong move up, holds the pullback, and jumps off the EMA, I'm going to mark up that high. I'm going to mark up that low. I'm going to look for that buy off the low of that hidden channel. Or maybe it really pops, right? Maybe it really jumps. Some news comes out, right? Whatever the case may be, really jumps up, shallow pullback, higher high in price. Look for that trap low below that low. Again, these are the same two breakout patterns that I mentioned before. So very straightforward plan here on the oil. Can we get that pullback, right? Get that seller failure running back higher again? Either a failure below the range, breakout patterns, right, above the trading range. If it keeps on grinding higher, though, just be careful. Don't chase after it because you got that round number at 40 right overhead. It could easily just snap up and then pull back for us, right? We don't want to go chasing after it as it runs higher here. Where do these buyers want to go, by the way? Right? Where do we think the objective would be for these buyers? We had a pendulum swing on the S&P. That made it pretty easy. Where do we think the objective would be here for these buyers? I would assume that 40.75 area overhead will be the one they're trying to hit in the short term. And then if things really get crazy, who knows? 41.72, 41.70, that is something on our radar as well. So we definitely will have those areas. Again, 40.75 being the next one above us, and they can keep pushing through that. 41.50, we'll say. How about the bears, though? Right? Maybe I'm making some out of nothing right now. Maybe this is just a pop. Maybe it's coincidence, right? Maybe it's a coincidence that a 72-hour stay for COVID, right, may just so happens to coincide, right, for a pop on oil. Maybe it's the hurricane, right? I don't know. But what if I'm wrong? What if the bulls don't really have it? How do we sell this thing going forward? Well, first of all, again, I'm not going to try picking a top on this, especially not until we get up around that $40 a barrel, right? Because we may not be at our kind of final resting place here for those bulls yet, right? So what if it is a coincidence, this whole thing happening on a Monday, right, on a Monday trading session? How would we qualify the reversal? Well, first of all, give me some momentum to hold on to, and then prove to me you can actually hold that pullback. If I can get that 1, 2, 3 reversal, good. Now we know those bears are hunting for those lows. Down around 37, I'm going to mark up that low. I'm going to mark up that high, and I'm going to sell short right off the high of that hidden channel. 1, 2, 3 reversal. And I know it's tough. I want to sell that first pullback too, but I've learned that lesson too many times the hard way. When we get those pullbacks like that, big move up like this, right? Buyers are dreaming of that pullback. I would gladly take a pullback failure for a retest of the high, but if they can hold that pullback off the moving average and make that, right, and make that strong jump, that's the key, the jump off the moving average, like this one, right? So those bulls came in, they jumped off the moving average right there, right? Nice big 1, 2, 3 move. Mark up that high, right? Mark up that low, and you're buying off the low of that hidden channel. It's the same pattern, right? 1, 2, 3 move down, mark that low, mark that high. Remember, first test is always the best test off of that high. I'm not trying to predict reversals. I'm going to wait for the reversal, and then we'll trade the reaction. We'll trade that 1, 2, 3 pullback here, right, once we see the proof of that reversal. Now, once again, I talk a lot deeper about all of these patterns in that free trading course. So if you've done so already, make sure you grab that free course link. It's in the upper right-hand corner. And again, I'll put all of the important links. I'll put the membership links, the trade room information. I'll put the free trading class information. I'll put all that for you guys down in the description of this YouTube channel. So grab that link in the description and get registered. That way you don't miss, right, tomorrow morning's trading session. All right, wrapping things up here over on the gold. Gold should be a relatively easy plan here for us, because at this point now, we pretty much know the best plan for a bull market into a trading range. Now, you can obviously see here, well, maybe not obviously, it's kind of like a Frankenstein move. They kind of chopped half of it off there and put it back into the tops there. You got one leg higher. You got kind of two legs higher, but you can almost kind of see, right? They almost kind of chop that second leg in half there. They do that every once in a while regarding these three-legged moves, but you can definitely see though, right? They've got that measured move on that final leg. We know we're bullish on the gold. We definitely know that for a fact. We can see those lower highs. We can see those higher lows. We can see that flattening moving average. It's a bull market into a trading range. Bull markets tell me to buy at support. Range-bound markets tell me find support below the range and look for failure patterns ultimately, right? So I'm looking for support levels. I really like the top, right? Basically where that market opened up and went lower. I like that spot at 1910.9. I also, this whole area here looks very attractive. It's prior highs, prior lows. That is a very attractive area there, that, 1913 to 1909 area. And let's not forget the hidden channel, right? Drawing that trend line off the highs, bringing it down to that low. This is what I like to see. I like to see that confluence where you've got support level, support level, support level. It's a nice deep pullback underneath the bottom of that range. That would be my dream come true pullback here for the gold market. And of course, I want to stay out of the middle, right? Stay the heck out of the range here. A lot of this has to do with kind of when we get the pullback, obviously. Do we get that nice deep pullback now? If we do, let's get those bears to come in, get them to try to get short. We know where their stops are. We can buy into stops. We can buy the pullback for the retest of that high. I would definitely take some profit off at the top of the range, leave the runner for the retest of the high. But you have to think that range is probably going to be, right, the most important target for those buyers. It's a seller failure into a bullish pullback pattern for that run back up again, right, to retest those highs here. One thing you do want to keep in mind, though, is if the market goes sideways here, right, and then pulls back to that channel now that channel is, we don't have the same bang for the buck anymore. We still have that resistance level right overhead, And so we know at that point now, the best entry pattern will be a trap, right? Trap entries will be necessary at this point because we simply don't want to buy too high. We don't want to buy into resistance. And the best way to avoid that is to use a bear trap, right? Use a trap below the low of that prior swing. So just be aware of that, right? It's not written in stone that we're buying the low of this channel. If the market does tread water here for a while, right, we may go below that, right, that channel here. The thing is though, let them get that market running lower. Let them send that sucker lower, and then just wait. Wait to see, do they hold the pullback for the reversal? If they do, mark the low, mark the high, right? Don't worry about missing the move lower. You worry about finding that channel and getting in short off that channel. Don't worry about why did I miss the reversal. Forget about that, right? Trying to trade the reversal is a fool's game. Well, it's not a fool's game, but it's going to be difficult when you're a new trader. It's an unreliable strategy going against momentum. I would much rather have all of my clients waiting for that 1, 2, 3 reversal. I'm sure there are plenty of traders on this planet that can accurately predict reversal. But the problem is, even the best reversal traders, you're only hitting 35, 40%. You got to make sure your risk-reward ratios are really good. So, long story short, so much easier, so much more reliable, and really a whole lot more enjoyable to trade with the momentum. Trying to go against momentum, it's a very nerve-wracking and very stressful way to trade. You probably have already learned that the hard way. So again, if they do hold the pullback, we wait for that 1, 2, 3 reversal. If they can't hold that pullback, right, if we do end up going sideways here, right? Skip the low of the channel, wait for that move down, get that pullback to fail, and we can buy right into those stop losses for that move going back up to retest those highs. So again, same thing, right? Seller failures below the low of this trading range, right? Or do we break higher here, right? Do we get that 1, 2, 3 breakout higher, marking up that high, marking up that low, buying the low? Again, first test is the best test. Do we get that strong run up, that shallow pullback to the moving average, that higher high in price, and that trap low from there, right? Do we get any of those breakout patterns? And where might we be going? Where do we think these buyers might be trying to go here? Well, I'll tell you, there is like a hell of a lot of space overhead here right now. There's a lot of open space. You got all the way up to that 1965-ish area there before you really run into any other previous tops. What I did was then I marked up the length of this move, and I thought, all right, if we can get a pullback here, that will probably determine where that measured move will be. Because you can definitely take 1, 2, 3 legs higher, combine that into one big leg. If the market pulls back and runs, where do we think we're going next? Probably going to be a symmetrical leg from that. And that's, of course, where I get that kind of major measured move up around that 1943 area. Pretty basic idea, right? Mark up that length, bring it over here, and then depending on how far the pullback goes, for all I know, the pullback could be deeper. I'm kind of estimating it off the low of that channel. So, 1944, 1943 and change up there. That will be anticipating kind of where that next leg higher would be. But let's not go fantasizing about, about $2,000 on gold just yet. Let's worry right now about getting that pullback, get that failure, right? Get back to retest the high, or if we go sideways, stay focused on sitting on hands, wait for that pullback to fail, wait for that breakout, right? That breakout pullback to fail, and keep using that range as a magnet. All right, guys, great job on this. We get a great plan of attack here on the gold. Don't try to predict reversals. Wait for those 1, 2, 3 reversal moves, then mark up your new channel, and then worry about hitting the top of that channel, right? Don't worry about predicting. Worry about reacting once you get the proof that you need. Guys, hope you learned a bunch on this video newsletter. I hope by now I've earned a like or maybe a subscription to our YouTube channel. Don't forget, if you have any questions about anything that we covered tonight, drop those questions in the comment section below. But most importantly, come out and join me tomorrow morning and every morning in our trade room, 8 o'clock Eastern time. I'll put all of the membership links you guys need to get registered for tomorrow morning's trade room. Again, we open up at 8 o'clock Eastern time with all of our advanced members. Don't forget to call the office if you have any questions about anything we covered here tonight. Feel free to use that live chat on the left-hand side, live chat on the right-hand side if telephone isn't a good fit for you. But most importantly, though, have a great rest of your evening. Thank you so much for tuning in on tonight's video newsletter. Be back tomorrow night. Again, short week here for the newsletter this week. Only going to publish newsletter on Monday and Tuesday this week. There'll be no newsletter on Wednesday, Thursday, and Friday evenings as we go into this holiday weekend. Hope you guys enjoyed it. We'll see you guys tomorrow morning, 8 o'clock Eastern time. If not, come back and see me tomorrow night on the next edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.